Hey. How are you doing, Chris? How are you today as we introduce the big picture for this week?
Well, Grant, great to see you. Living and breathing, and life is beautiful.
It really is. We just had a discussion, and we want to bring it to our audience. We're talking about the news. We're talking about media. We're talking about tariffs that are scheduled. Hopefully, or something to that effect that's going to take place. We're talking about tariffs. We're talking about trade, and we're talking about technology and shipping policy.
Mm.
I want you to bring something to the table because I want to talk to the elephant in the room. And that has been around tariffs. Now, I'm like, any other U.S. taxpayer, right? I sit down, I turn on the nightly news, it comes on, they talking about tariffs. And I'm like, do we actually have tariffs? Are they just speculative tariffs? Are there something that may happen? How's that going to affect my business? Is it up, down? I mean, this is a big thing because if you're dependent on other markets for your supplies, and then you don't know if that price is going to go up or down, stay the same. How do you adjust to make sure that number one, of course, you want to be profitable, and how do you go forward? So I want to bring it to your table as the financial IT guru. How do you see the world of tariffs unfolding on the world stage?
Well, Grant, excellent conversation this will be because, tariffs are something that I've always kind of followed closely because it has such an impact on our global supply chains and on people in general. So let me give you just a little background. I mean, if we look at tariffs, they go back actually as far as the 16th century, right? Tariffs were first initiated, and they weren't first initiated as we hear about today to protect industries. They were initiated as a source of revenue for the government. Okay, you could really equate tariffs to taxes because it
Yeah.
was initially started as a tax, and up to even today, that most of the countries out there have tariffs to raise money for the government. It's because they put tariffs on products that are not manufactured locally.
Mhm.
So, what industry are you protecting, right? And by the way, the country that has paid for decades the most tariffs globally has always been the US. Because my opinion is other countries look at us and say, hey, we can afford it. Hey, we've got the money. So put the tariffs on US products. And they do that, and it's a source of income for the governments for them. Okay. Now, in our situation now, we look at how tariffs have developed. So in the 1800s, when after the Industrial Revolution and the industrialization here in the United States as well as Europe, you started having tariffs that were used as a form of protectionism to protect local industries from cheaper product coming in. And that makes some sense, right? It's still
Mhm.
money that goes to the government. Okay. To me, it really should be if you bring in this money to protect the industries, well, then a portion of that money should go to those industries. But and we actually do that in agriculture. In agriculture, there's government subsidies to the farmers for many different things. And okay, it's not directly from the tariffs, but it comes out of the government. The tariffs go into the government, so in effect, it's kind of the same thing there. And we had this situation at the beginning of the Great Depression, where in 1929, when we had the crash, the government threw in a whole bunch of tariffs in 1930, looking to raise money for things, and it just made things much worse.
Mhm.
And really, it was one of the underlining reasons why the depression got worse. And then when Franklin Delano Roosevelt came in 1932, that changed the New Deal, and we know what historically has happened since that time, right? So now if we look at our current day uh, situation with tariffs, right? If we go back the last two administrations, right? So tariffs came into play in the Trump's first administration, okay, where he really looked to use tariffs as a way to protect U.S. businesses, encourage foreign companies that sell products in the U.S. to actually manufacture some portion in the U.S. And there was some success. When Biden came in, the last administration, very interesting because people look at that party as anti-tariff, and they look at the other party, Democrats, Republicans, they look at Republicans as pro-tariffs, right? The interesting thing is when Biden came into office, he didn't remove any of the Trump tariffs. They all stayed in place. And he actually added some of his own. In fact, in July of 2024, he put 100% tariffs on electric vehicles coming into the U.S. He put a 50% tariff on solar products coming into the U.S., right? And these were done to protect the U.S. industries of electric car manufacturing and of solar products manufacturing. But in effect, you look at what was really being told to us, and you look at the amount of people that are very interested in the environment, right? Solar products, electric cars, as we know, are things that are beneficial to the environment because they're not polluting our airs, for instance, and doing all these things that contribute to the global warming, right? But when you put those tariffs on, it means that the American consumer is paying more for their electric cars. So, in other words, if you want to buy an electric car that's manufactured in China and the selling price is $30,000, 100% tariff means that the price the American consumer will pay is $60,000.
Mm-hmm.
Okay, and it's kind of a strange thing because on one hand we want to encourage the use of solar products, we want to encourage the use of electric vehicles. On the other hand, we're making sure that the price stays at a point that makes it pretty much not feasible for the majority of Americans. Mm-hmm. Right? So that's interesting. And you hear very little about those tariffs that were instituted in the last administration. Now we come to this administration and the tariffs, it's all over the news, right? And to me, there's two things going on. One is that the U.S. is saying to everyone else, hey, listen, you've been hitting us with tariffs for as long as we can remember. I mean, literally for the last century, right? And you've been hitting us with these tariffs and taking this money in. And now it's time to even that playing field out a little bit. That's one. Number two is I really believe that there's not an interest really in the administration in actually instituting the tariffs and instituting them at some of the rates that we see. For me, and understanding global trade and everything, to me, it's a tool being used by the administration to bring other countries to the table to work out better trade deals. Because we can go all the way back. The U.S. has always been on the bad side of trade deals. And why? Okay, I don't know. We feel bad for other countries? It seems like that, right? All the trade deals that you could point out going back, really have been better for the other side. So that's starting to even out. But again, you have areas, in particular Europe, right? And Europe, they cry like crazy. Okay, when I'm over there often, and I'm over there, you read it in the paper, you hear it all over the place. And see, to me, it follows a certain path. Grant, follow me on this one, right? Okay.
No, I'm listening because I know the audience is listening and leaning in because you're laying out the playbook. Because this is a strategy at the end of the day of how governments play, games one way or another. And there's a couple of things at play here. It's not just the tariff of itself. It's the perception of the tariffs that are taking place, right? How is it perceived on the world stage?
Yeah. So when you look at Europe, right, first, the U.S. has always had very favorable trade deals to the Europeans. We have very little tariffs that are on the European side, right? That's one. Number two is militarily. We've sustained them for years. I mean, NATO, we were paying for all of NATO for all these countries. So what does that do for those countries, right? So if you look at the US, our military spend is something around 4 to 5% of our gross national product. It's a huge, huge number, right? Go over to Europe and you look at countries like France and Germany, the two biggest in the EU. You look at the UK, they're all under 2%. Most of them are under 1.5% of their gross national product spent on their defense. Why? Because the US is paying the bill, right? Now, combine that with the fact that haven't been hit with tariffs over the last bunch of decades. And now if you're a European politician, you look at your budget and you say, well, we have so much extra money to spend. The best way for me to see spending it is to make sure I stay in power. And I can do that by going to the people and saying, hey, you know what? You can retire at 60. You can retire at 55. Hey, you know what? We'll pay 100% of your medical. You don't have any cost to medical. Hey, you know what? We can give you a pensions right from the government beyond what you could expect, right? We can make sure of all these things. Why? Because the U.S. has allowed us to have extra money in our budget. And as good politicians, we want to make sure that we get the votes and we stay in power. So we do this for the people. So now what happens, fast forward to today, all of a sudden, they're threatened with tariffs. All of a sudden, they're threatened with paying a bigger part of their defense, right? And they cry. And they're crying because now they don't have the money. Why? Because they gave the money in social services and a sundry things like that. And those things you can't take back, Grant.
Well, I think what you're saying is what we're going to do.
Telling people you can't retire till 65 when in Germany it's age 60. That those politicians will be out of office immediately, right?
So Chris, so what you're and this is what I'm hearing, especially as a layperson, is that, and I always look at the world economy as a monopoly board. And what's happening now, it's been played a certain way. And then now the banker, let's say one of the bigger bankers, the U.S. bank, he says, you know what? I'm going to play my cards differently. And this is causing a big ripple effect, throughout all the, different other countries, their economies, how to be doing things. Because as you said, hey, if we've been doing certain things a certain way, and now we changed how we're doing it, it's going to change what they're doing. So it changes the conversation. And as we were talking earlier, the conversation is really around the media and the news and how they spin these stories out, and whether positively or negative, whatever you're on, what side of the ball that you're on, you're not getting the full picture. The big picture gets lost. Like, why are you changing the rules? What is going on in the game? Who benefits? It's like a musical chairs type of thing. Obviously, the losers are going to tell a different story, because there's benefit at the table. So when we come back, we're going to go a little deeper into this conversation because it's important. And then on the big picture, we want to make sure you have a better understanding. So we'll be right back.
Third Wall Street is a new emerging global capital markets formation and structured trifactor financial hub at the U.S. third border in St. Croix, U.S. Virgin Islands, in the Caribbean and Latin America. The new Third Wall Street is the home of the Alexander Hamilton Financial Center and named in honor of Alexander Hamilton, an American founding father, first U.S. Treasury Secretary, and architect of the U.S. financial system in modern America. Third Wall Street is located in a U.S. National Heritage Area, Opportunity Zone, and the boyhood home of Alexander Hamilton in St. Croix, U.S. Virgin Island, connecting 3 financial hubs in the Americas by way of new innovative financial technology and markets. New York Wall Street, Wall Street South, Brickell Avenue, Miami, and 3rd Wall Street in St. Croix, U.S. Virgin Islands, and established the new Caribbean America's Single Economy Zone, developed by SETI Case Capital Markets. 3rd Wall Street will transform financial markets, improving access to capital worldwide. Visit www.thirdwallstreet.com to learn more.
Follow the Brand TV broadcast host, Grant McGaugh, as he visits with top executives and entrepreneurs to find out their secrets of success with their personal brand. Follow the Brand TV broadcast host as he focuses on brand development to build better relationships, bring value to your business, relationships, and career. You will enjoy listening to each episode that is tailored to speak to you directly. If you're looking for this type of clarity in terms of building your brand, you have tuned into the right station. Each episode will help you to shape a conversation in the 5-star BDM network of 20,000 professionals and become a springboard for your corporate engagement and business opportunities. Each guest will frame their story in the areas of personal branding, business development, career development, financial empowerment, and technology innovation. Grant McGaugh explains why he is the CEO and owner of his own professional career. Grant is an accomplished business leader and entrepreneur who wants to give back to individuals to grow their personal brand strategy. Tune in as he weaves his story about new possibilities, while to you exceed expectations. If you love storytelling, this show will make for fun.
I want to welcome everybody back to the big picture. We got Chris, Big Picture Principe, talking to us about tariffs and trade. And we just had a great, you really set the stage about what it is and why it's important and how governments play these kinds of games. But they're important. They're important for leverage and how things are looked upon when it comes to trade. Because to your point, you use the tariffs to bring people to the table to have better trade conversations, and you should come away with a better deal at the end of the day, for hopefully your country, your people, or maybe for your government, however that's going to work out, because there's going to be winners and losers no matter how this kind of plays out, because there's change. Now, the other big elephant in the room that we talked about, now we're on a media platform right now, right? We're not what you would call quote unquote news people, right? We're not the Walter Cronkite of trade and tariffs. However, we are concerned citizens. I think we do bring a measure of concern, intelligence, understanding to the table for other people to tune into these type of things. Like, well, what's your take on these things? But I would talk more like the media that comes out, because you just brought something up. The first Trump administration, they were doing tariffs. I don't know, it wasn't that big in the media. It was around, but it wasn't the main story, right? Then you said the Biden administration, yes, they had tariffs as well. They were doing tariffs on different electric vehicles, other things that were coming into the country, and how they were changing pricing. But again, it wasn't that big in the media. Now, Trump as being a person he's on the stage. You can't say he's not a person that has a bigger than life personality, no doubt about it. And then when he's doing I might call it grandstanding for other things. Maybe they're doing it on purpose. They say, hey, we're gonna do this new dance. People are gonna pay attention to us. We got a new administration. We're gonna, raise, hey, if you get a 50% tariff, you get a 75% tariff, you get a, and all this kind of thing. But in fact, I don't think anything's really taken place so far. However, people are jockeying for position in trading, but we're talking about perception and the news media. And me being a brand and marketing person, am I getting the big picture when I'm tuning in to the sound bites across all these different news outlets, or is there something else really at play? I want to get your take on that, Chris.
Yeah, well, Grant, you just bring up a whole load of great stuff there, and yeah, we had a little conversation, about the media, and yeah, I mean, we're in effect part of the media, but I think what people don't understand about the media, or maybe don't realize about the media, is that especially the news media, it's a business. It's a business that needs to make a profit, and what they do in that business today versus decades ago when I was growing up is it's not in their best interest to just deliver the news. They need to make it more sensational so that they can get more eyes and make more profit. It is, once again, it's a business.
Now, I'm going to stop you there because this is important. I want our audience to really, really understand this, because I'm in my 6th decade of living. I remember, you had Walter Cronkite News. He came on, he delivered the news, and that is the way it was. Then you would go to the grocery store, right? And you start seeing these newspapers, these sensational lines, the National Enquirer, right? And you would have this great Loch Ness monster lived, Bigfoot lived. I mean, he was in your backyard yesterday. Here's the photo. I mean, that was the National Enquirer. And I proposed to Chris to say, doesn't it seem like today's news is more like the National Enquirer than it is like a Walter Cronkite type of presentation?
Well, Grant, I mean, what people I don't think realize is the impact that the National Enquirer had in changing the way news was viewed, delivered, and consumed, right? When I was young, the National Enquirer first came out. Where you saw it at the checkout counter in the grocery store, right? And yeah, sensational headlines, but they were profitable, right? Mm-hmm. And that was kind of the key thing. Now, everyone looked down on them to a certain amount, but they were consumed. People bought it. People wanted to read that, right? They wanted to read some story, whether it was true or not, about their favorite movie star. And by the way, the National Enquirer was sued for slander many, many times. And part of that, I believe, was by design, because it, again, that gave them exposure, right? Because the other news outlets all pick it up. And I think you're spot on. That is what has changed the way people view news and consume news. So when we fast forward to today, very interesting. A couple of months ago, I saw an interview with the gentleman who is head of CBS News. Mm-hmm. And part of the interview, he said right out, he said, look, I don't like Trump, but he's the best thing for our business. We're more profitable every day that Trump is there. Mm-hmm. It was pretty interesting, right? Because, again, they're only interested in not necessarily the news. They're interested in how much they can make. They're for-profit business.
The business, yeah.
I got to tell you, when you look at the newspapers right now, for me, the main thing I read in the news, and the first thing was always sports. Because you know what, Grant? 20,000 people were at the game last night. They can't lie about the score, right?
Right.
But the newspaper business is a very simple business when you come right down to it. It's, if I sell 1,000 pounds of paper yesterday, and today I sell 1,001 pounds, I make more money. And I'm going to put on that cover of the newspaper what will best sell the most pounds. Now, of course, newspapers have kind of gone by the wayside. I mean, the only two people I know that still get the newspaper subscription is my 91-year-old mother and my 85-year-old brother-in-law. So that tells you about the newspaper business today. But yes, when we look at other media forms that are out there right now, social media in particular, it's all about sensationalism, and it's all about how little people have to watch to get some idea. But as long as they click, guess what? That outlet makes money.
And you brought up another point, and I liked your point, is that you can get real facts. You can get truth at your fingertips now by
Yeah.
utilizing the internet. You can Google things. You can use our our new AI, artificial
AI for
intelligence
sure.
for large language. You can get factual information. However, if you depend on these 15 to 30-second sound bites of information or sensationalized 1 to 2 minute clips, and then you say, oh, and then you try to draw a perception from that. The whole point is, are you artificially influencing the opinion of a large group of people about something that's pretty important, as you just said, tariffs, trade, or how money is made? Because at the end of the day, it's not about like dislike. Personalities come and go.
Mhm.
But if you are, in fact, being more successful, depending on how the playing field looks, that's important. But you've got to get real information. I'm sure that when you turn on and you see these big corporations, they're going to make an important decision. They're not probably getting that information from the nightly news. Am I right?
Well, Grant, look, I'm the publisher of Financial IT, right? And
Yeah.
we're both a magazine as well as other media outlets. And internally, when we have a story or we're looking at something, we fact check. And
Yes.
it's important. We fact check at least 3 sources because you do get corresponding or non-corresponding views. And here's the thing, which I like that you just said too, which is that they look to influence you. Okay, so why do they look to influence you? Well, they look to influence you because if you're influenced by my news, you will watch me more often. And again, then I'm a more viable business and I'm making more money.
Mm-hmm. Mm-hmm.
Right? So all this comes together. So let me fast forward a little bit to right now. We have, the tariffs. And again, I really believe that the tariffs are a very useful tool to bring other countries to the table so that we can get fairer trade deals for the U.S. because they have been one-sided for decades and decades, right? Now, it's interesting because, as I mentioned before, Europe in particular is crying very heavily. When I'm over there, a lot of their news stories start right off with, oh, the American people are going to pay more because of this, right?
Mm-hmm.
Yeah, they don't want the tariffs in Europe because they can't afford to make changes in the way they're collecting money, and they can't afford to pay any more. Those countries, are not financially very strong anymore, right? So they use the media. So here's some of the things that really I pick up on, okay? Here, our news media picks up on that and says, yes, prices are going up for all Americans. And one of the main things they were pointing out for months was the price of eggs.
Yeah.
And I think we've all noticed, right, that since the end of last year, eggs have gone up from $2 and change a dozen to $8-9 a dozen. Now, of course, it's back down, right? And it's back down to the $4 range because, by the way, if I'm an egg producer, an egg farmer, I like the higher prices. I don't really want to see them come back down to where they were. But what the media doesn't tell people is the reason the price of eggs went up had nothing to do with tariffs. It actually happened before. Because at the end of last year, we had a terrible infection across the U.S. chicken population, which wiped out a huge amount. So it's just back to basic business, supply and demand. Less eggs, higher price.
Mm.
Okay, but let's look at other things. For instance, one of the most talked about prices that Americans pay is the price of gas, right?
Mm-hmm.
Have we seen any jump up of price in gas? Now, I looked at my local gas station here. We're still in the $3.10 to $3.20 range, and it's been under $3 a number of weeks, right? And yeah, if you go out to California, you're paying $4.40, $4.50, and that's strictly because in California, it's over $1 tax by the state government on gas because they're also a mismanaged state with a huge deficit and have big budget problems, right? So, but at the same time, that foreign change price in California has been consistent for the last couple of years, right? So, where is the prices really going up? Well, I happen to do most of the grocery shopping in my family, so I see what the grocery prices are. And the one that sticks out to me that I've seen increase more than anything really has been the price of beef and meat in general, right? And this is a staple of Americans, but I'm having a hard time understanding why that price is increasing other than the manufacturers, the slaughterhouses, the producers feel that they can get higher prices, right? Because it's not like we're importing cows and now there's a tariff on the cows.
Yeah.
Okay.
Yeah.
We're not importing pigs and there's a tariff on the pigs. Okay. These are, in fact, we have an overabundance of these products and we export them. So why is that price going up? And I can't really come up with a good reason other than to say that the media talks about how Americans are going to pay more. So the producers say, hey, good time to let's just raise the price a little and see.
I think what it is, and we got to go to a break here pretty soon, but you've got to do your own due diligence and try to understand what's really happening, because I think a lot of our news is sensationalized and they do it for reasons that you just stated. They're looking to make a profit. They want to we're in an attention economy. If they got your attention, they're going to go ahead and utilize that. And then it's, hey, well, if I got all these eyeballs on this attention, and then you have advertisers, it's like, yeah, I want to, people to see my ad because they're all paying attention to this type of thing. But at the end of the day, you still need eggs, you still need gasoline, you still need to eat, and you need to understand and do your own due diligence what's driving these pricing and what's best for you going forward, so you can make a better choice. So with that said, when we come back, we're going to talk about what's really at stake, the global stakes, the digital trade future, what this all looks like, because as the game changes and the tariffs take place and the new trade goes along, there's some effects that could be beneficial for us in the Caribbean world, in the U.S. economy, and things of that nature. You got to get on you can focus on the bad if you like, but like, what's the good out of this? What's the light going forward? It's like, okay, well, that's shut off, but what's turned on? Let's talk about what is turned on. So we're going to come back and we're going to have a good conversation with Chris. And I like how you said that you are a media mogul yourself.
In today's fast-paced financial landscape, access to capital is the key to success. At the heart of this revolution is Case Capital Markets, powered by SETI-Case. Here, innovation and investment converge, creating a dynamic environment where businesses can thrive and reach new heights. Introducing Grant McGaw, the senior advisor at Case Capital Markets. Grant is a visionary leader, dedicated to connecting businesses with institutional capital and strategic funding. His expertise opens doors to game-changing investment opportunities, making him an invaluable partner for companies looking to scale and succeed in the competitive world of finance. With an impressive 25 years in technology, 9 years in healthcare, and 6 years in investment banking, Grant McGaw has a proven track record. He has successfully closed over $500 million in high-value transactions, seamlessly bridging technology, healthcare, and infrastructure with innovative financial solutions. His experience is a testament to his ability to drive success. Case Capital Markets offers businesses direct access to over 32,000 venture capital firms, private equity funds, family offices, and institutional investors. This network empowers mid-market companies with under $100 million in revenue to scale beyond their limits, unlocking unprecedented growth potential. Debt, equity, growth capital, public offerings. These are the building blocks of the future of capital access. Whether you're scaling a business, seeking investment, or exploring market expansion, Grant McGaw is your trusted partner. Together, you can unlock capital and create long-term financial success. The future belongs to those who take action. Are you ready to elevate your business?
I want to welcome everybody back to the big picture. We got Chris, the big picture principe, right here with us. And I want to say, and Chris, you've been doing big things for a long time with financial IT. I want to know what do you think is at stake here? What are the global stakes when you think about the Caribbean, what we're looking at in St. Croix with the SETI case, St. Croix Economic Development Initiative, and the Caribbean American Global Single Economy? What do you think is at stake here?
Well, Grant, there's a lot at stake. Okay, let me put that right out there first. But let's start a little bit on some of the effects and some of the things that are going on with the tariffs and some of the things I think that they're hoping the tariffs do. And one of that is to, of course, get fair trade deals. The second is to look to move more industry onto the U.S. proper and have companies, instead of manufacturing and exporting to us where we're importing, to actually have those things manufactured to some extent here in the U.S. And that's looking to get rid of offshoring, right? We want to nearshore or inshore, right? Mm-hmm. But the other thing that it's doing is also getting companies to diversify away from countries that are also retaliatory to us and have been taking advantage from the U.S. perspective, right? And now we're entering a period where we're what we call friendshoring. Mm-hmm. Okay, so we're looking to move more of that business, again, domestic U.S., of course. We want money and jobs here. But Mexico, for instance, Vietnam, for instance, countries that have looked to work with us, countries that came to the table very quickly to make new trade deals with us, right? So this friendshoring is now a bit of a trend. And where that really gets highlighted, I think, is when you look at the Caribbean in general, right? Now, we've had what I believe is issues over the past years in actually finding those products from the Caribbean and bringing to the U.S. And a big portion of why that's been difficult has been transportation, right? Mm-hmm. There's not the ability to cheaply move products. Most of it has to go by air. So it's your higher value products and the lower volume products also. But cheaper products really need to be shipped by sea. And, mm-hmm. and we just don't have a network there anymore. Years and years ago, you did, and there was quite a nice network, and it was really centered as Puerto Rico was the shipping transit point. But that stopped years ago, maybe mainly because of the politicians in Puerto Rico, in my view, anyway. So we look now, there's a great opportunity for the U.S. Virgin Islands to become that transit point. We know that the U.S. State Department wants to move the third border out to Puerto Rico and to the U.S. Virgin Islands, as well as some other places. So it creates an excellent opportunity where immigration and customs happens there before it gets into the U.S., where products can come there. And because of some of the unique rules and laws and regulations in place in the U.S. Virgin Islands, if companies look into it, they'll find it's very attractive, much less costly, and really removes a lot of barriers. And the whole perception of the tariffs hurting the U.S., actually the U.S. Virgin Islands becomes the center for reducing that, for easing that, for making it a way to be able to benefit both the Americans as well as the Caribbean nations.
All of this is very important when you start talking about compliance, transparency in the new maritime economy. I mean, if you've been following the big picture, we've been talking about how the financial landscape is changing rapidly, and you're starting to see more digital currency come onto the scene. So to your point, if we can improve the shipping, but also improve the financial transaction or the financial playing field with what we call the stable coin. Why do we keep coming back to that? Because you need a unified currency within the Caribbean. Just like in the EU, they had the Brexit, right, and all this type of thing. But there is no type of unified currency within the Caribbean at this point in time. There is CARICOM, but they don't have a unified currency. So when you have something like a stable coin that's backed by the U.S. economy, a $30 trillion economy that now has presence at the table of CARICOM through the USVI, that's the United States Virgin Islands, through St. Croix, who also, by the way, and we're talking financial, we're talking about IT, we're talking financial IT. I want you to get the big picture of financial IT here. They have one of the largest fiber networks located right there in St. Croix. And people, you need you to understand this. Like in New York City, we have Wall Street, you have the New York Stock Exchange. Why is it so successful? They have one of the biggest networks, technology networks in the world, right? So when you have something like that also in St. Croix, you can start to see transactions in real time taking place on stable currency, stable coin, right? Something that's a trusted source of commerce. And this is and I want to say something that, Chris, you brought up like 2 or 3 weeks ago, and I want this to be very easily understood. So if you're in a different country and then you buy a stable coin at a certain rate, let's say it's $1 million of Guyanese, coin, let's just say that. The next day, and you buy, you take that $1 million of Guyanese and you buy, let's say it's a 1,000 stable coins, even though that Guyanese money might, let's say if it goes down in value, it's still $1,000 or $100,000 of stable coin. That's why it's stable. It's very, very important to understand that, because in some of these other countries, the currency values, the volatility happens a lot. And so when you have something that's more stable, then when you're shipping from Jamaica to the Dominican Republic and therefore that you have something that's very, very useful as a financial tool set. So with all that said, Chris, talk about how we can really grow and do some things that are not in place today, but it looks like it's going to be on tap going into 2025, 2026 from a shipping and logistics standpoint.
Well, Grant, you've segued into a really important area, because when we're talking about tariffs, again, what we're really talking about is money and cost of goods. And one of the real issues the last 2 decades, really, in the Caribbean has been, first off, the de-risking, where all the big banks have pulled out of the Caribbean because the markets are too small to justify the risk of them being there and doing business there. So they've pulled out. It's made it very difficult in the Caribbean, to be able to get US dollars, euros, British pounds, Japanese yen, any of the Chinese renminbi, any of these, viable currencies that are, on the global stage, right? It makes it very difficult, makes it very costly, right? Okay, so that's one side of it. The other side of it is, when we look at the Caribbean nations and the multitude of currencies, pairing them is also a big issue and concern, because there's just so many currencies, and it's so difficult to be able to find the ability to exchange those. Okay, so when we look at both those things definitely have a negative impact on trade and on the economies in the region, right? Brilliantly brought up by you is the faith and hope that we have that stable coins will reduce this. And not only does the name say it, and you outlined it very, very nicely, that it stabilizes the fluctuations that happen in these currencies against the major currencies, right? Stabilizes that. So your value stays your value. And then it's easily accepted on the other side because that value has stayed that value, right? But it also does some other things. One, you no longer have these fees that are charged in between for the FX, the foreign exchange costs, right? And it's not just the cost of, Jamaican dollar is 5 to the British pound, whatever it is, right? Just as an example. In banking, foreign exchange is very profitable because of what we call the spread. Okay. So while it might be 5-1, okay, the bank is really paying you 475, and on the other side, charging you 525. That's the spread, that
Right.
difference, and it's not visible. Okay, and by the way, they like that, but you would eliminate that because in any of the situations we talk about, FX plays a very important part in converting one currency to another. That's one thing. The other thing that stablecoin does, which to me is very important for trade, is the speed of transaction improves tremendously. When today it can take a few days to move money from a country in the Caribbean, the Cayman Islands, for instance, to Spain, right? It may take a few days. With a stable coin, it's almost instantaneous. You can do it in a few minutes. Now, today, the banks provide a very fast way of sending money. Okay. And this also bothers me, okay? Because what people need to understand is the speed of money movement is not based on the technology. Okay, the technology can move any amounts as fast as you want, right? But a bank will tell you, oh, if you want to get that money here today with a guarantee, with assurances, you need to send a wire transfer.
Yep.
Okay, and a wire transfer will cost you, depending on your relationship with the bank, anywhere from $25 to $100 here in this country. But for that, you know that money got there today and it's confirmed today, right? So let me ask you just a quick question, Grant, and it's a little technology question, which is, if the banks can move a wire transfer at that speed, right? Why couldn't they move all money at that speed?
I think because of the spread. I think you just, like what's in it for me? I think that's it.
See, and here's the other part of it, right? Even domestically, we have what's known as low value payments and high value payments, and they're charged at different pricing. In fact, it's more than they're charged at different pricing. Is that there are firm dollar limits, right? So, for instance, if I have $10,000 in my bank account and I want to send it by what has become very common today, Zelle, right?
Yeah.
Okay. I can't send you $10,000. It's over the Zelle limit. I can send you maybe $2,500. Why? Okay. The technology doesn't care if there's 2 zeros or 20 zeros.
Right.
Right. The technology is just moving numbers, right? It doesn't care. What has happened is that limits have been put on because it benefits. Here's the question, Grant. Who?
It benefits the bank.
Absolutely. Now, it's just like your ATM. Most people have a limit how much they can withdraw a day.
Yeah.
Okay? Be it $250, $500, $1,000, doesn't usually go too much more than that. And if you say to the bank, well, I want to increase my limit, or why are you limiting it? It's my money, because in fact,
right.
It is your money, right? The bank will say, sir, please, we do in this for your protection.
Yeah, right.
Okay. As soon as you hear that, it's always for their protection, not yours. Okay. And here's the reason why. If your account, your ATM gets hacked and the money's taken, the bank is responsible. So what the bank has done is limited their liability to $1,000. Right? So the most they will be responsible for is $1,000, not the full amount in your account. Right? Because even if you hack in, you can only get that $1,000 because there's a hard limit on what can be withdrawn from that account on a particular day. That's why, especially years ago, I remember, I living in Manhattan, and we used to like to go out to the clubs at night. Okay, at like 11:55 and 12:05, there'd be a line at the ATM. Why? Because people were taking out as much as they could before 12, waiting for it to get 12, and then going again and taking more out, and then you have more money to party with. Okay? So kind of interesting. But all these things, if we come back, go to some of the things that the big banks as well as other governments have really put as limits on what the Caribbean is able to do as a region. Okay? It's unfair, it's uncalled for,
Right.
and it serves no purpose but really to damage those economies on a daily basis. So
This is important. This is
where's the
important
bright
to
spot?
understand that. Yeah.
Where's the bright spot? Well, if we can really create this banking center in the Virgin Islands, and we can, and if we can do that in a way benefiting from technology, in particular stable coins, which, by the way, the banks are ready and anxious to get involved in that. And that might be good and bad. I'm sure they're going to find a way to make.
Well, what's in it for me? I mean, you always got to understand that.
Now, you got to understand, there's one thing the banks love, and it's called indirect income. So what's indirect income? This is money they make with really not doing anything. So when you go to your ATM and they charge you $3, that's indirect income.
Right.
Okay? They'll look to do something on this. The spreads on FX, indirect income. So the banks cry all the time, oh, they're taking away the fee money that we make and everything. But at the same time, the banks are increasing indirect income
Transaction fees. Yeah. They have their ways, their mechanisms that they utilize all the time. We're just used to it, paying it. But like I said, depending on the volume, it's okay. A couple of dollars you might not worry about, but all of a sudden that couple of dollars over a lot of different transactions accumulate to a lot of money. And then that's what's called leakage, right? And all that leakage is going out, especially when we're talking about a country. That's a lot of leakage, right? You start looking at those numbers. So if you can get that money back on your side of the ball, why wouldn't you do that? There you got blockchain, you got stablecoin. You start looking at these other ways of why other countries are looking at doing it that way. Because again, to your point, you get your money quicker, right? And then you can transact more, better, faster, quicker, better. And I think all that goes back down to what we're talking about: supply chain. We're talking about trade. We've been talking about tariffs. I mean, we're kind of bringing all this full circle now. And I want you to do that, Chris. Help the person understand. We've been talking about, for an hour. We talked about tariffs, trades. We talked about supply chain, how it can help the Caribbean market in general. Bring it all together for us.
Grant, look, there's things that need to take place to improve the Caribbean as a region, right? And we have a lot of those pieces. So the question right now is, how do we put it together and how does it get funded, right? So this is the challenge that I see that we have. And to me also, when I look at the Caribbean, the greatest resource throughout the region are the people. And that's being affected right now. We're having a brain drain go on where the younger people are not seeing opportunity and they're leaving. To me, the opportunity for a lot of these young people is in technology. Doesn't matter where in the world you are. It doesn't matter, what it is that you want to get into. There is opportunities in technology. And we really need to start harvesting that growth, that ability that's there today as part of the new economy.
Yes. Finance, and we were talking technology, fintech. I'm also into healthcare. You bring those are three major sectors because health, you're talking about people, whether you're healthy or you are in need of healthcare is very, very important. I understand technology for me is always about communication and the speed of transaction. One thing that technology does very, very well, when you look to deploy whatever the technology solution is, always look at it from the lens of speed. Can I do something quicker, faster, better? And then can I communicate quicker, faster, better. And when you start looking at what we've, a lot of people into AI and what it really is a communication platform. How does it communicate? And it communicates very eloquently in text and audio and video, and it can to a point where it has human-like appearances. Right. This is very, very important. And then understanding these platforms around blockchain. Why do people like it? Because of trust. Can I trust the platform that it's on? And we talked, kind of brought out this whole discussion. We talked about the news and things like that. Can you trust it? That's the thing, right? Can I trust the words that come out of some of these, politicians' mouth? And most people will say, of course not. But if you can now find a quicker, faster, better way of getting good information, because you do need information and you need intelligent information, you need something that you can then apply the knowledge to, right? This is important. That's why I think the technological world that you just talked about is so important. And as long as we can have that as a trusted source, we can go a long way.
Well, Grant, I think you're spot on with that. Thank you for reinforcing a couple of key ideas, and I'm looking forward to next week's show.
Oh, yeah. Next week, we're going to bring it back around to us because we are talking about big things on the big picture. And it's always, always a pleasure speaking with you. And I encourage everybody to tune in again. Wednesdays, 10 a.m. Eastern. We are live on the big picture. I want to thank you again and our entire audience. See you soon there, Chris.
Thanks, Grant.